everyone, this is the Trader Investor, and today's focus is going to be Forex. I'm going to do two videos. The first one just looking at the major currency pairs to see where they are and just analyzing them and preparing for the week ahead, where we see value, where they're coming to an area of value where we are able to enter or break structure. We're going to review that first, and then in the second video I will work on imbalances, order blocks, and combining the supply and demand zones, combining different techniques, different methodologies, different learnings we've been doing so far to precisely and like a sniper enter our positions. So that will be the second video. It will be a little bit longer, a lot of education in that video, but in this first video let's just go over real quick on where we are with the major currency pairs, what I'm looking at to trade, and where I'm setting up positions. So let's start with AUD USD, and looking at that, we have recently come off our most recent order block. So I'm going to remove that because we're no longer there, and then we had an area of consolidation. This appears to be an area of accumulation. We were in a downtrend, momentary downtrend, but if you zoom out, we are again in a consolidation, but this consolidation has big wide ranges. So from the 75 65 area to the 79 96 area, so that's quite a wide range. So we can, because this is a daily chart, we can look at this shorter term bullish movement, shorter term bearish movement, and now that we have come out of an order block and entering another order block, where do I see opportunities? What I see for this pair is I would like to see this block, this accumulation block tested, and this would be our E3 in the Wyckoff accumulation analysis. This would be our E3, our best entry possibilities, because we've been able to touch the order block, and I'm safe to assume that we can get out of this zone and target the next order block. But I would like to see a price testing this area, and as we get closer to this line, this is where I will go to my hourly chart to look for break of structure, a down move, break of structure, to enter a position to the upside. So that's what I'll be looking at for AUD USD. Next, let's look at Euro USD. That one again, we have made some order block, bullish order block. We have cleared a bearish order block. So when we clear an order block, I like to remove that order block, and now we are in an area where there's liquidity. Many people want to go short because we've tested this twice. We had a double top here, now it's a triple top. We've tested this multiple times, so I want to see some clearing of this liquidity so that we can safely enter a position. So by clearing, I mean is there will be a bullish entry here. That bullish entry will take out the stops for the short positions, and then there will be another bearish bar to clear out the stops near these lows for all of those who want to go bullish, and then we take our real bullish position. And we might not even go this high, we might go a little bit higher, come retest this zone for an entry. This would be a beautiful, beautiful entry. So this is what I'm looking for the euro. Again, all of this are looking at the daily, nothing else, just looking at the daily, being able to find entry positions on the daily. As price moves and does what we are expecting it to do, this is where we'll go to the hourly chart and pinpoint our sniper entries. So that's where we are with Euro USD. Now let's look at GBP USD. This one I talked about last week. We are at an area of value. An area of value meaning we have some liquidity that have not been cleared yet. So I would like this liquidity to be cleared. This order block here, this bearish order block, we're slightly into that order block, and I want that price to decide what it wants to do there. Maybe slightly push up and then continue to do this. Or if it doesn't want to do that, my preference will be we come clear this liquidity for a fantastic entry to at least target the next order block, right? So ideally that's what I would like to see. That's what I'm waiting to see, and the most logical, not logical, but the most profitable position would be to clear this order block so that it doesn't become a headwind, so that this gets out of the way. We clear that order block, come down, clear this liquidity. Once we clear liquidity, we're home free to go at least target somewhere up here. That's what we want to target. So because that's the next order block that's waiting for us, and we have this liquidity. Liquidity near an order block is a beautiful thing because liquidity gets cleared. Clearing that liquidity could potentially get us into that order block. Not always. It could mean that once we clear this liquidity, we come back down. That's a possibility. So what I want to see is once I find an entry at a break of structure in the hourly in this area, then I will at least expect my target to be in this area, even if it's not able to get all the way up here. If we can get here, it's good enough for our exit, and we will get 4, 5, 6, maybe 8 reward to every one risk that we put in place. So that would be great for our GBP USD. So let's look at a few more. NZD USD. We are coming very, very close to our latest bearish order block. So as we enter that position on the hourly basis, I want to see, because this has a bearish bias for now. This is bearish, even though long term it's been bullish, but a long-term bullish that has a very deep pullback, a pullback that is trying to test the 61.8% retracement, could be bearish. But until we break 61.8%, I'm not bearish yet. I'm just saying it just has a temporary bearish bias for now. So I want to be able to take advantage of that. If we enter this position in here, this order block, and we get a good break of structure on the hourly, we can target this liquidity area. We can target this area, and it'll still keep us above the 61.8% retracement for our long-term bullish movement. Or it'll go down, it doesn't matter. That the or part is always something for down the road, like in a couple of weeks or in a couple of days when price does this. How do I prepare myself? But for now, what I want for NZD USD is, I like price to test this order block, give me a rejection to come clear this liquidity, and so that because I have a short-term bearish bias, I can enter this bearish. I like to always enter in the same direction as my bias, unless I break the 61.8% retracement. So Kiwi, that's where we are. So now let's go to USD CAD, the Canadian dollar. So on this one, far away from any order blocks right now, there's really nothing that excites me. You might want to draw an order block down here. However, for me, I'm not clearing any level of highs So I don't treat this as an order block. It might be this previous order block is pushing its price down, and the institutions are taking profits as price goes back up. So I'm not seeing any sort of institutional candles that tells me. For me, an institutional candle is when we start to break recent highs. So I'm not seeing any swing highs broken. So far away from any area of value for an entry. So nothing to look at really in USD CAD. In the Swissy USD CHF, the Swiss franc, here we have an area of value again far away. We just recently broke the order block and we broke it through. So either price will reverse. So I'm going to watch this a little bit more closely, because what could happen is we could break structure in the hourly and try to go back up some more. So that could be a possibility for us. But the other thing is, how much of a retracement are we in? How much of a retracement are we in? It's less than 50%, right? So that's why I'm kind of waiting for this to happen rather than a breakdown to the downside. But I'm going to watch this a little bit more closely, better than USD CAD. And lastly, let's look at USD JPY, the yen. The yen, we just came to an order block. This is our area of value. This, I will actually keep it here because I want to remind myself to take a look at it when the market opens, because what I want to do is, if we see a break of structure in the hourly, it might give us an opportunity for a long entry with very, very tight stops. So this is why I want to take a look at this. So where are we? This is where we are with all of this major currency pairs. This is where we are. And on Monday, Sunday evening, when the markets open, we'll be able to see. And for me, it's Monday because Sunday is very low volume. It's the Asian markets, very low volume. The real volume picks up during the London hours, but I'm asleep during London hours. So I gotta get up in the morning for work. So I want to be able to just take a look at my charts and do my entries before my workday starts. So I want to focus on the New York hours because it's still early for me. So it's between 5 and 6:30 a.m. my time. Is London hours are already open, so I can actively monitor what's going on. So this is how I'm preparing. I have all my order blocks drawn in here. I have my prices coming near those zones in some instances, in others far away. And as the markets develop, then it's a brand new opportunity presenting itself to us. All right, everyone, take care. And I want to ask you again, remind you again to keep encouraging me by liking these videos if they've been valuable, if you've learned anything, and if you are going to be able to leverage what I'm teaching you, please like the video and encourage me. Thank you and take care.